It's been a turbulent week for the Federal Reserve as it tackles a liquidity crunch in the repo market. Overnight borrowing costs surged Monday and Tuesday nights, and interest rates spiked to almost as high as 10% for some transactions, raising questions over whether or not the Fed is losing control of interest rates. But what is the repo market, and why is Wall Street worried? It's time for Yahoo U. Brian Cheung is here with the lesson.
All right, Adam, well, class is in session, and if you recall, it's been a pretty crazy week for the repo market. In fact, a lot of people maybe didn't even know that was a thing before this week. We saw a liquidity crunch Monday night into Tuesday night that saw some banks and broker-dealers paying as much as 10%, as you mentioned, for overnight funds. But what exactly is it? How exactly does all of this work? Well, let's explain this a little deeper with our explanation here. So let's use an example. We have two banks. We have the Bank of Julie Hyman, who unfortunately is out of the office today, but we also got Adam. So you're sitting down here understanding exactly what's going on here as the head of the Bank of Adam. And what basically this is all about is getting funding to operate day to day. So this is all overnight. It's very temporary, it's very quick, and it's fairly simple if you think about it. Basically, the Bank of Julie in this case has a number of treasuries, and this could be other securities as well, not just treasuries, that needs financing, needs to get backed by cash. Now, she can hold those on her sheet, but at some point she's going to need the cash to hold that in her balance sheet. Now, Adam has a lot of cash that he can offer, so he can sell the cash to Julie overnight for a fee. So he's going to charge an interest rate on that, but in exchange, as collateral, Julie will offer treasuries. This is why this is called a repurchase agreement, which is the long name for a repo, because she's selling the treasuries, the securities, to Adam, and then repurchasing it for cash later on. Now, this is the first, that's first at night, but when we get to the morning, and our producer put my face in the sun here for some reason that I don't understand, but when it comes back to morning again, the treasuries have to get returned back to Julie, and then Adam gets the cash back, again, closing the loop here for the overnight repo. Now, why does any of this matter, and why did we end up seeing a liquidity crunch on Monday? Well, if you consider that it all has to do with the amount of cash that's available in the system, not just by the Bank of Adam, but by all the bank reserves in the system, if there's fewer cash available, but a high demand to fund it, that means that there should, in theory, be a bid for interest rates going up as people demand more money to lend that money overnight. And that's exactly what we saw. So this right now is the excess reserves available in the system. So what we've seen over the past 3 years or so is that it's actually been a pretty precipitous decline in the amount of cash that's available in the system. Why is that? Because the Federal Reserve's been shrinking its balance sheet. Keep in mind the Federal Reserve controls the money supply, and ever since 2017, the Federal Reserve began shrinking its balance sheet, which then took the amount of cash available in the system out of the banking system. Now, that explains the bid up that we then saw as a result of those changes. So what you're looking at here is the effective federal funds rate. This is the amount of interest that players in the space actually end up paying. Keep in mind the Federal Reserve has a target range, right? Now, what you're looking at is what actually exists in the market. So this right here, if I can point this out, was the spike that we saw at the beginning of the month that shows just how much people were paying. So the Federal Reserve has a target range. It would like the interest rates to stay in that range. But we saw a bid up because of the fact that the lack of cash, despite the fact that there was a rush for financing those treasuries and other types of securities overnight, ended up pushing the price and the cost of this overnight borrowing up. Now, the next chart that I'll show you shows the actual federal funds range, the upper bound and also the lower bound that the Federal Reserve has targeted every time it has those big Fed meetings that everyone dials into. So before Wednesday, the federal funds target range was between 2% to 2.25%. You can see the blue is the high end and the orange is the bottom line. What we saw on Monday night into Tuesday night was that the effective federal funds rate actually ticked up to 2.3%, which is actually above the high end of the Federal Reserve's target range. What this means, did the Federal Reserve lose control of its interest rate policy? It's a sobering reminder that the Federal Reserve's interest rate policy is actually aspiring. It's not necessarily exactly put into place. It uses these kinds of repo market changes in order to set what they call a floor, which is why the New York Fed ultimately had to step in and provide some extra liquidity in the form of its own repo market, which it set at an interest rate that it felt was comfortable enough to be back in this range. Now, what you haven't seen is that there's been a lot of change. On Wednesday, the Federal Reserve then changed its target range from 2% to 2.25% to 2.25% to 1.75%. Since then, the Federal Reserve also implemented a new set of overnight repo facilities, again, offered by the New York Fed to try to meet some of the liquidity needs for this repo market. And what we saw actually as of this morning was that on Thursday, yesterday, after the Fed changed its policy, it ended up going back down to 1.9%. So basically back in range of the Fed's new change here. So for right now, it seems like the Federal Reserve's gotten a grip back on its interest rate policy. But for what it's worth, there's still a number of looming questions about whether or not the appropriate level of bank reserves actually exist in the system. So a lot of wonk, a lot of repo terminology that people hopefully now learn about. But again, this kind of in a nutshell was exactly what happened this week. But remains to be seen about where interest rate policies and the Fed's grip on that interest rate policy goes through the end of this year.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.